Welcome back to the Dropping Knowledge podcast. I'm here with Bez Bajrami. Thanks for hopping on, man.
Oh, happy to be here, man. I'm looking forward to a good discussion.
For sure. For the people that don't know, he's the founder of Cube Wealth. Bez will allow you to give a little more description about exactly what you do and your way of business.
Absolutely. So let's start from the beginning actually. So just a little background on myself. Graduated from Rutgers Business School a little over a decade ago. Where a decade goes that quick, I'm not sure, but we're over 10 years now. Initially started with an internship at Merrill Lynch. Took that internship and leveraged it to get a full-time job at JP Morgan in Manhattan. So I worked there for a couple years. I got my series certifications. Everything was good there. I always had this entrepreneurial spirit though. Even in college, I started multiple companies. We can touch on it if you want, but I even have a patent and trademark in chewing gum.
Wow.
That's the extent of the entrepreneurial spirit I have. I guess it just runs in the family genes. So I always knew, even while at corporate, that I wanted to do something on my own, and I just became so enriched in the markets that I initially started as a podcast myself, a weekly newsletter, and then I started getting a lot of leads on the newsletter, and then people were asking me like, "Hey, man, I'd love to pick your brain on this, pick your brain on that." So I thought, you know what? Maybe there's something more I can do here than just a free newsletter that really just gives you a brief update in the market. It doesn't really let me create any kind of strong relationship with any of my readers. So I took the leap of faith in May of 2017 and started Cube. So it's now over 8 years full time that I've been working on the company. And essentially, what I do now is I am 100% focused on long term investing, essentially getting people to move away from the day trading and more into the think in decades mentality. So I do this through a plethora of ways. I create complex discounted cash flow models that I learned from my experience, essentially looking for new companies on the market, creating these intense models that arrive at what I believe is a fair intrinsic value of what the company should be worth under multiple scenario analysis. So I do things like that. I create equity research reports. I create global macroeconomy research reports. So I kind of refer to myself as like the Netflix for investment content. I don't make guides. I don't make courses because they're silly. You cannot make a course that's a one size fit all when it comes to investing. I have a lot of subscribers that are in their 60s that are nearing retirement. There's no way you can make a one size fit all course for someone who's at that point in their investing life cycle versus someone like yourself who is in his early 20s. You guys have the time on your side. You have the ability to take more risk. The guy in his 60s doesn't. So these are completely different strategies that are required. And I essentially create these different types of models and economic forecasts and things of that nature that people subscribe to that I release to them monthly, along with private live streams and private podcasts so they get additional exclusive content. Of course, they see everything that I own as well. So I always update every quarter on how my portfolio performance is doing, stocks that I own, stocks that I'm selling, buying, again, all with the long term vision in mind. My average holding is usually 5+ years long. But to make a long story short, I help people invest long term, teach them about the markets, and just to think in decades in this crazy era of, get rich quick.
For sure. It's a good intro. What do you think people should know about the market? I know a lot of people focus on timing the market, but I've seen a video of yours where you focus on time in the market rather than trying to time the market. Could you elaborate more on that?
Absolutely. And that's exactly what it is, man. So a guy like yourself should be so excited about the opportunities that are out there. Uh, and I think the fact that all of my leads come through social media naturally develops a younger clientele that I have. And what I'm always drilling into their head is not to be so fearful of the market. A lot of you guys are so nervous, and I don't blame you. I don't blame you. It's just when you don't really know too much about the market, you're kind of initially scared or reluctant to get involved. But I always tell you guys, especially in your 20s, you should almost be looking and craving market dips because you could put money to work even if it's not a lot. And I know people go crazy when I tell them, oh, you could put $100 a week in the market if possible, and it could be worth maybe a million in the next 15, 20, 30 years just through compounding interest. And a lot of people are like, oh, well, I want that million now. Okay, well, listen, when you're older, you're going to want that million, and that $100 a week that you spent throwing it into your DraftKings account is so much better in your Schwab or your Robinhood account, whichever you like to use. So yeah, I think the first thing I would always tell people is get started sooner than later because the time value is your greatest asset. And then if you are truly unsure of understanding financial statement analysis, understanding what the cash flows look like, the balance sheet, the income statement, then just stick to broad-based index funds, the S&P 500, the Nasdaq 100, things like the Russell 2000 even, and just put that on a monthly recurring deposit, and don't even think about it because you don't have to be a Wolf of Wall Street mentality to take advantage of the market. Honestly, the less you look at it, the better. It should be almost
Yeah.
more like a hands-off type thing because you just want your money working for you, especially in this high inflationary environment post COVID. Your money really, you should be looking at the money in your bank account like it should be bothering you almost because it is eroding in value. And that's how you have to think about it. So the market is a great, nice and easy way of doing that, especially now. I remember when I started in college, Angelo, dude, I wish I can go back. I wish there was someone like Cube to help me back then. The way
Yeah.
I started investing in college was ridiculous, man. Uh, so back then it was Scott Trade, which is no longer around today. It was $10 commissions just to buy a stock, and then
Wow.
$10 to sell. Now it's free.
Hmm.
Although I have my things about that. But point is, I was working with like $2,000, $3,000, and I'm thinking I could day trade, not realizing and not even doing the simple math that in order for me to break even on this $1,000 trade, I got to make several percentage points just to cover the commission. It's silly. And I thought I could day trade. I blew not just my money, I blew the money my dad matched. So that was a quick 5, 6, 7,000. I don't even know what it was going back to when I was 18 years old, about 13 years ago, 14 years ago. So I had to learn a little bit the hard way, but thankfully it wasn't with six digits. So if I were to tell your audience, don't be so concerned about all the nuances. You can go with a broad-based index fund like the S&P 500, gives you a basket of the top 500 companies, and you can keep it simple like that. And until you then get familiar with understanding, and then you can take some more individual stock risk.
Exactly. And Bez, if you were to go back when you're 20 years old, how would you diversify your portfolio and what would you focus your time on investing in?
Yes, so great question, man. So if I could go back, obviously the answer is buy Bitcoin. There's just no doubt about that. But back when I was in college from 2011 to 2015, Bitcoin, I don't even want to look what it would have been. It's easily under a dollar, I'm sure. So yeah, obviously you would say doing that. But look, let's be realistic. No one really knew what it was. It was a shady way of transacting in the, on the dark web, whatever the heck you want to call it.
Hmm.
But realistically, if I just bought the S&P 500, I would have made multiple times my money. Okay, uh, if I had though, there were such big names. You could have went with Apple. You could have went with Microsoft. You could have went with Netflix. And these are things that you say to yourself. Obviously, the cloud is going to be the future. Obviously, streaming is going to be the future. These at the time, bro, it was an iPhone 4 or something like that. iPhone 5. Like everyone's going to want to own this product. Same thing goes to Nvidia. All these GPUs. This is the new cutting edge technology. You had to deal with some serious volatility in the meantime. Absolutely. But if you could stomach that and just trust that you see where these technologies are going, man, you're talking like 10, 20x your money, As opposed to what I was trying to do starting out was thinking more shorter term, what could I make 2 to 3x on, in the next 6 months? And that's the quickest way to lose your money. It is. It is. When anyone asks me what's the quickest way to become a millionaire in the market, the quickest way is to start as a billionaire. That's the quickest way to become a millionaire in the stock market.
Yeah,
So, yeah, man, that's what I would have done. I would have just played the longer term game, but again, I had to learn the hard way.
for sure. And what are some of the key indicators that you look at in companies before you invest? I know today's definitely more popping with AI and tech and everything. So where does your mind go when looking at a stock?
Yeah. So we're in a very interesting time period right now where so many of these AI companies now are starting to bait a lot of people into the market. I do think there are some legit AI companies out there. There are some bubbles forming in certain pockets. You just have to be careful how to delineate and how do you go about delineating. So, before I even talk about financial metrics, which are extremely important, I'll touch on them. We have to remember, especially if you're investing long term, there are people that run these companies. So you want to really analyze the C suite, the CEO, the CFO, the COO, the board. What kind of track record do they have? Are these guys Do they have a proven record of success? Are their interests aligned with the company? In other words, check the Form 4 filings. Are they buying or selling more of the company stock? How much of the company do they actually own? Or do they have a vested interest, or is this just a new CEO that came in, grabbing his fat paycheck, and then he'll part ways in 5, 10 years? These are the things you have to look at. So what I personally favor are founder-led, founder-run companies. As a founder of a company myself, Cube is my baby. I will go to the end of time to make this work. I will give it everything I have. I love finding opportunities like that where I know that this man has been in the trenches with this company since day one, and he's not just here for a buck. So I do prefer founder-led, founder-run companies. Now, when I'm looking at the financial metrics, it does depend what I prioritize on where the company is in their maturity. So if you are looking, especially with these AI companies, most of them that are catching on fire today are not profitable. So if that's the case, and that's not a reason not to invest. You don't need to see profits first to invest. You need to see a path to profitability though. So what you want to see here is, okay, what does a revenue ramp look like? A lot of these guys are still very, very early stages, so they're not doing much revenue. So you look at the revenue ramp. Then you ask yourself, okay, well, how truly scalable is this business? In other words, is there something known as operating leverage built into the model? So if they do start selling their product, what are the gross margins? For those that don't know, gross margins is revenue minus cost of goods sold. So forget about the marketing, forget about the research and development, general admin. The costs truly and solely associated with the providing the either the service or the product. You want to see some healthy gross margins there, so this way, as they scale, it could lead to some solid profits. So you want to look at that. You want to look at cash on hand, okay, and then compare that. So you're going to see the cash on hand in two areas. You're going to see it on the balance sheet, or you're going to see it at the bottom of the cash flow statement. You want to make sure they have a sufficient amount of cash on hand, especially if they're not profitable or generating free cash flow yet. You then want to compare it to their cash flow burn. So in other words, what you're trying to calculate here is, okay, company's not generating any cash flow yet. How many years of lifeline do they have with that cash on hand? Because the number one really killer of a lot of stocks is something known as dilution, where they have to keep raising more equity, right? Issuing more stock to raise cash to keep the business afloat. Or they'll raise toxic debt, especially with this higher rate environment that we're still in. So you definitely want to make sure they have enough cash on hand. You want to avoid the serial diluters. The exact opposite of that is a name like Apple that is a serial buyback company where they just keep reducing the shares outstanding, which is great that they're returning capital to shareholders. So to make a long story short here, check the management team, make sure you trust them, check any kind of past record they have. If they've been part of two companies that went bankrupt, you really want to trust them on the third one? Make sure their interests are aligned, that they also own a decent amount of shares in the company, so this way, everything is in line with your interests. And then yes, check the balance sheet health. If they're already profitable and cash flow is not an issue, then yes, you want to get into multiples. These are like price to earnings multiples. So like, what are you paying for every dollar of earnings they bring in, per share? What are you paying with regard to EBITDA, right? Earnings before interest, tax, depreciation, amortization. These are very, very important multiples you want to keep an eye on. If you are super, super conservative and you're looking at dividends types of companies, right? Companies that pay nice dividend aristocrats, then yes, you want to see how that stacks up in comparison to other companies out there, also versus bonds and what the trade-off is. So I could go off for hours on exactly how to really lock in on each different type of company, but depending on their maturity, you have to kind of favor different metrics more
That
than
makes
others.
sense.
Yeah.
And I like what you said too about like the founders and if the founders are invested in the stock because then they're in it with you. It's like if it's going down, we're all going down. So I like that.
Yeah.
And it's like I feel like Tesla, I might be wrong with Tesla, Amazon are like good examples of that, right?
It, especially early on, they definitely were. Now that they're getting so large, like Bezos, for example, because I do follow Amazon way more than Tesla. I'm really not a fan of Tesla, personally speaking. Um, Bezos, for the first time ever, now owns less than 10% of Amazon. First time ever, as of I think just 2 months ago. I mean, that's still a freaking lot. I mean, the
Yeah.
company's worth, over $2 trillion. But yes, but he's always had his interests aligned. He's always owned a good amount of company. It's tough. It absolutely is tough because you'll get diluted yourself as a founder if you keep trying to raise money to get the company going. But yeah, you're not really going to see founders today owning like 30 or 40% of their company anymore because they had to go through different stages of seed capital, venture capital to get to this point. So they naturally get diluted themselves. But yeah, if you see like even 3%, 5%, 10%, that's, I would say, more than enough.
For sure. What do you think some big misconceptions are about investing that people have?
Oof. Um, I think the fact that everyone calls it a scam that doesn't know what it is, I think that's unfair to say. There are some very smart people in this market. Are there now more algorithmic trading going on? Is it way more bots? Sure. Yes, absolutely. I think to call the market a scam is really speaking from a position of just not really fully understanding what you're talking about. I think the biggest misconception, though, outside of that, is thinking that you have to invest in penny stocks to really make a killing in this game. You don't. The way we are seeing valuations today in the market, you are pushing, and it's a very unique example, but Nvidia just the other week hit a $5 trillion valuation. Okay, $5 trillion market cap. So, in other words, if you found a company that has been around for a while, is extremely legitimate, and they're trading at $100 billion valuation, don't think there isn't any more upside left in the company. Yes, as you get to 2 and 3 and 5 trillion, you do have to ask yourself, okay, how many more times can this double to justify the valuation? In other words, in order for Nvidia to double from here, it has to justify a $10 trillion market cap, which would be quite difficult. It's doable, but it's not going to be easy. But at the same time, it does create opportunity of knowing what's possible investing in $50 billion companies, $10 billion companies, $100 billion companies, because the game has changed. So I think a lot of people, especially younger investors, they think that they need to come in and buy some 10-cent weed stock in order to make a killing. And I also think another issue is when you start with such little money, you don't take it seriously. So I see people start with $1,000 or $2,000, and instead of trying to compound that, over time, they're like, you know what? I'm just going to take a nice big gamble here, turn it to 10,000. Then I'll use that 10,000 and I'll take it much more seriously. When in reality, you're probably not going to find a 10x opportunity, so just don't throw it away. I really, man, I can't say enough. The way I see people treat their Robinhood accounts is very, very similar to their DraftKings or FanDuel accounts, man. Like it's the same kind of just like screw it, let's take a shot here, and that's a quick way to hating the market and then never wanting to touch it again.
For sure. And I think it's that delayed gratification that we're lacking nowadays because I even see it with my own stocks. Like I want it to go up, but I'm not number one planning to sell anytime soon, which is another question I'm going to get to. But if someone's starting today with investing, they have about 50 extra dollars they want to invest. Where do you think they should put that money in the stock market?
Well, without giving them quote unquote financial advice, because obviously you need to know how much risk appetite they want to take. Your generation, I've never seen this kind of risk appetite in my life. It's unbelievable.
Yeah,
Like I look at people's portfolios, they're in their 20s and they're shooting for the stars. If you're starting with $50 and you literally do not know a thing about the market, the SPY. It's an S&P 500 based index fund. Go with that. If you are willing to take more risk than that because you're aiming for higher returns, no problem. You could read a book by Peter Lynch called One Up on Wall Street. His strategy is if you're starting on the market, invest in things you know, touch, and feel. So early in his career, he did fantastic with many different consumer brands that he saw on a day-to-day basis just being consumed, right? Being used. Whether that's a name like Nike or Coca-Cola or something like that. You could look at the same opportunities here. I wish more females would invest, for example. I really do. They would have such good insight, especially in like the cosmetics area, of knowing when a brand is losing its edge. Right? You have, for example, today, Elf Beauty today is down 35%. I guarantee you, if we asked any of our girlfriends right out there, or our mothers or our sisters, they'd be like, yeah, their brand's probably falling off. I don't see many girls shopping there anymore. And you'd probably have an edge. You
Yeah.
honestly would, because their finger is on the pulse. Same thing goes for a name like Ulta Beauty. Or you can own something like Sephora, although Sephora is bundled into a larger conglomerate called LVMH that owns Louis Vuitton, Givenchy, and all those types of brands. But you would have good insight into that. So I would say yes, use your background uh, to exceed in the market. Right now I know my brother very interested in the company On that makes the cloud runners. Right, he's huge on the brand. He's actually thinking about buying the stock that's pulled back recently because people are concerned that we're in a recessionary environment. Why? Because he wears their shoes, he wears their clothing lines, and he says this is next level, and he doesn't believe they're a fad. He thinks they're here to stay to compete with things like Nike. Um, so I would definitely say, okay, if you don't know a lick about the markets, stick with an S&P 500 fund that owns a whole basket of the top companies. When you buy the S&P, which is under the ticker SPY or IVV or VOO, they're all the same. This is provided by different companies. You're owning Apple, Netflix, Google, Amazon, Berkshire, Nvidia, Meta, which is Facebook, all of them. If you're willing to take a little bit more risk, stick to names you know. Please, for the love of God, do not buy a pharmaceutical company that's in FDA approval stages, right, in clinical stage, and you don't have an idea of what the drug is, how it's doing, because you'll be regretting it with high likelihood. So that's what I would say, man. Stick to what you know if you're gonna go the individual stock route.
That's good advice. How do you think someone could start to make money through investments? Like, how do you start to see returns? Do you know, are you more in dividend stocks? Like, how could I profit from investments without selling at the wrong times and making sure I keep investing to build wealth?
Okay, so this might get a little confusing here now. I might be getting a little ahead of myself here for any audience, not even just yours.
Mhm.
So I'll speak to myself. My portfolio, usually I'll keep it to 25 names. I rarely like to go above that because it becomes very difficult to keep an eye on everything. And on top of that, you don't want to over diversify either. If I'm going to own 40, 50 companies, I might as well just own the S&P 500. So, with that being said, I do own the S&P 500. I do own bonds. I do own utilities, right? These are safer, more protected names. I do own other stuff that pays me nice dividends, like real estate investment trusts, right? So I am getting exposure to real estate through my portfolio as well. That is paying me dividends. I do take a good amount of risk too in growth companies that are executing and playing in artificial intelligence, geospatial intelligence, autonomy, robotics, fintech. The list goes on and on. I'm even getting exposure to emerging markets down in Southeast Asia or Latin America. There's opportunities out there as well. So I have a very diversified portfolio with very stable names, dividend paying names, recession proof names, but I am taking a stab at those higher risk names too that have 2x, 5x, 10x for me. I also do own some crypto, so I am rooting for Ethereum here. I'm actually now back in Ethereum after being out of it for a while. I did really well the first time around, so hopefully second time around here treats me just as well. Now, a lot of people will be like, okay, that's great, it's growing, but I'm not taking anything from it. Like, yes, it's moving higher and higher and higher, and I've been investing for 13 years, and it's my account is well into the six digits now, and it's a beautiful thing. That's when it really starts to get fun. But okay, am I not going to touch it until I'm 60? What can you do? So in this case, and you have to be careful here, you can use options to generate income against your portfolio. Now, when I say the word options, most of your audience is going to think the usual way of playing options, which is just like buying a call and hopefully the stock rips and you make, 1,000%. I don't play options that way because one, I believe is purely gambling anyway. No one knows where a stock's going to go in the next minute. I am the house. I play as Vegas. I'm the one selling the contracts to you people. And I collect the premium when that happens. So you could do that through two main ways. You could do that through covered calls, which is selling call options to people that are buying them, or you could do what's called cash secured puts. But again, I operate more in the covered calls. So in this case, again, this could get a little confusing here. Let's say I own 100 shares of a company. A call option gives you the right, just one single contract gives you the right to buy 100 shares of a company, gives you the option to do that. Most people never exercise them. They just buy the contract and flip it to someone else, for a quick trade. But if you actually held that call option to expiration, you would actually be on the hook to buy 100 shares from somebody at that price. So let's just say, for example, we have a $10 stock, okay? And someone buys an $11 call, right? Because they think it's going to run to 11, or they think it's going to run to 12. If they don't flip the contract for a profit and they let it expire, they are on the hook to buy 100 shares of that stock at $11. I am the guy that sold you that call. So I'm selling you the right to buy my shares from me at a certain price. So what I love to do, I'll give you a perfect example of a cover call I'm on right now, but I won't say the name because it's too good of a name that I can't give away for free. All right, but so I'm up a lot on this stock, right? I made very good money on it, and people were getting so crazy because this stock's been running a lot that they were paying. So the stock at the time was $35 a share. People were paying 2 weeks from now. At the time, now it's gonna be this Friday, but 2 weeks in advance, they were paying a significant amount of money to buy the stock from me at $60 a share. The stock's at 35. Okay? Now I own a good amount of this company, so I was able to sell quite a bit of contracts. I collected $40 per contract, right? So I put several $100s in my pocket to give some knucklehead the right to buy my shares at 60. The stock's at 35 right now. And it didn't happen. The stock is nowhere near 60. So all that money is mine. Some
Yeah.
dude took a gamble, it didn't pay out, and that profit went right to my pocket. And that's what you could do. And I forgot the exact statistic, but I believe 85% of contracts expire worthless. So, and that's when you're selling it, you love that because I want to collect as much as I can and it disappear from my account and then do it again. The guy that buys it, he's hoping he bought it for me for $40 a pop or 40 cents because it's quoted in lots of 100. He was hoping it would go to 50 cents or 60 cents to make a decent gain. It never did. And if it did, if it doesn't close over 60, it's worthless. So I sell people dreams essentially. And I didn't mind either selling it at 60 because if it did, for example, I know maybe I'm confusing you, Angelo. If you want to ask me questions, please. Because
Lightly,
I
but
know this is pretty complex. But if you're
yeah.
following me, let's say this stock, I was wrong, and this stock went to $70 a share. Let's say it doubled, right? Well, first things first, I wouldn't care because my stock position just doubled. But I would be on the hook to sell the guy my shares at $60 because that's the contract I agreed to with him.
Got it.
But what do I care? I would sell the stock at 60 anyway.
Exactly.
So it didn't go there. So I was a win-win situation. And I collected money. And guess what? After Friday, after tomorrow, and they expire, next week, I'm going to sell another batch of an idiot that thinks it's going to double in the next, month. And I'll just keep doing it and doing it. So that is a way, again, to make another long story short, and I apologize,
No
is
worries.
how I will generate some nice, money against my portfolio. And if I want to cash it out, fine, put it into your bank, take a girl on a nice date, fine. I don't do that though. I then take that money, I reinvest it. Anytime I get money, man, I am plowing it back into reinvesting.
You gotta put it back. Yeah. Once I saw a YouTube video or Instagram reel, and it was like you could use your money. Think of your money as like soldiers in like an army, and every dollar you have, you could put it to work, and then you get more soldiers and put them back to work. But
I
not
love that.
everyone's smart. Not everyone's smart with money, and personally, I'm trying to learn myself. So, what's your strategy without giving away too much of your sauce? Would you say you make more money through the investments and then reinvest them? A percent of it, all of it, none of it? I guess it depends on the person, but if you want to build long-term wealth, what's the key?
Okay, so this is where my models that I was referring to at the beginning of this podcast come in handy. I cannot commit to owning a name forever. I'm not a day trader, no. My average holding is usually 5 years long.
5 years.
All right, that's usually what it comes out to be. It is getting longer as time passes because I still own names like Microsoft for the longest time and other names. So the length is getting longer. But my models are my sauce. So I have three different scenarios when it comes to my model. It has a base case, which is exactly what I'm expecting with high probability. It has a bull case that is a little bit more optimistic. So I'm assuming faster revenue growth. I'm assuming better free cash flow margins. I'm assuming a lower weighted average cost of capital, all of which I know is gibberish to you. But and then my bear case scenario, which is okay. Let's say my projections for this company over the next 10 years, with regards to revenue, cost of goods sold, headcount, all that kind of stuff, comes in lower than expected. What do I think shares will be worth then? So when I love a company and it checks all my boxes, I'm trying to buy around that bear case scenario because now it's creating a safety of cushion for me. So if this $35 stock I think under my bear case scenario is worth 27, if I can get this stock around 27, the risk reward is beautiful to me. But let's say I own it and it starts to go towards my bull case scenario, my rosy best case scenario. That is where I'll begin to trim. So that really keeps me from getting too emotional in this market because I know greed it's really you against yourself, right?
Yeah.
So my strategy is I will own it for long term. If I believe the valuation is no longer justifiable, I will trim or outright sell. I never, Angela, maybe this is disappointing. I never pull money out of the market. I never pull money out of the market. Now, my long-term goal is to, yes. I run my own company. There's no 401k here. There's no pension plan. There's nothing. This is what this
Good.
is my bread and my butter, okay?
Yeah.
And I invest aggressively because my end goal is real estate. I already bought my first duplex earlier this year.
Congrats.
Thank you. I didn't have to pull any money out of the market for that, thankfully. But when it's all said and done, I do plan on growing my portfolio, continuing to hopefully grow it, sell it, use it to buy real estate. That's how my family's made a ton of money in their lifetimes, and that's my retirement. So that's another reason why I don't have a 401k or a traditional IRA because obviously I'm self-employed. Is because I do want access to that capital. I'm not trying to wait till 59 and a half to withdraw. I want that liquidity. So now I kind of put a good amount of money in this property. Now, if another deal hit my table and it was so good I couldn't pass up on it, maybe I would take from my portfolio a little bit, but it's a last resort, man. The one thing I can tell your viewers is by any means try not to pull from it because you do want to leave as much money in there as you can because when you do cross the six-figure mark, right, and you're ahead of, I would say that's like the sweet spot. When you cross 100,000, those 10 to 15% annual gains really start to make a difference. You know,
That's the compound kicks in, most you would say.
that's where I think you really are like, whoa, this
Yeah.
is fun. Oh my goodness, like a 10% gain now, you start to cherish it more because it's 10 G's now. Whereas when you start with $1,000, you're like, dude, what's 10%? Like $100, I can make that, doing nothing for like 5 hours somewhere.
But you have to start with that.
But exactly, and getting over that hump and that like again that instant gratification you were talking about, if you can get by that, oh man, it's fun on the other side, man. It really is. Just you just gotta stick that part out a little bit, and do not blow up your account. Like you cannot go so aggressive that you risk your entire portfolio because starting from scratch, oh man, it's terrible. That's the end all for you. And as I alluded to a little earlier, when you go for a high risk name like that and it doesn't pan out, you kind of throw your arms up and say, yeah, I knew this marketing was a scam. I'm never touching it again. And then you hate it for the rest of your life and you don't realize how much money you just left on the table because you were just trying out early and it didn't pan out. And so your initial reaction is your forever mentality like, hey, this thing's not for me.
You're
When it
judging
is for
once.
you.
Yeah, exactly. You
It
can't
is
judge
free. It's for everyone, man. Like
for sure.
especially if you are bullish on the long term, possibilities in different technologies. You don't even have to go like, oh, I need to own quantum computing. I hate most quantum computing companies. In fact, I just made money shorting a company in quantum computing, right? Betting on its downside, because I think a lot of these companies are honestly scams. I really do. So you don't have to go that far. I've been talking to my clients, brother, about John Deere. You might say to yourself, well, John Deere,
Yeah.
what's there to like about this name? Well, people are sleeping, in my opinion, on what they're doing in autonomy. Everyone loves Tesla because it's machinery, yes, but they're more than that. It's potential autonomy. Robo-taxi fleet, self-driving, so on and so forth. Tell me how John Deere is any different. Sure, they don't maybe have the same technical capabilities and artificial intelligence suite that maybe Elon has, but you don't technically need that sophisticated of an AI model because off the off our roads. This is, it's a much also a lot less tape too, red tape, with regards to autonomous farming equipment, man. You don't have to worry about pedestrians. So there's also less red tape there. But point is, that's a name that I think is a sleeper. I don't own it yet. I'm still doing my models on it to release to my clients, but it has my interest. And you might say to yourself, well, why? I believe, a sleeper name that also has a lot of tailwinds. You also think about current immigration policy. We might have a shortage here on our hands with regard to agriculture. How do farmers make up for that lack of supply of workers?
Machinery.
Machinery that needs to operate 24/7 on its own. Who's one of the biggest beneficiaries of that? John Deere. Is John Deere spending any R&D on this? Yes, they are. So and again, it's $100 billion company. You might think, well, what's the upside there? In a world where anything can be worth 4 to 5 trillion now, I'm not saying John Deere's gonna be a $1 trillion company where it 10x's, but
Oh, there's opportunity.
there's opportunity, and I'm saying don't scoff at it because it's a name that's been around for 100 years.
Exactly. They're probably using a John Deere to cut the lawn outside.
You know what? Yes, they probably are, and I apologize again. I should have told these
No,
guys to come
not even
later.
but I'm just thinking it's like you said before, buying brands that you can touch, that you see often. Like you go to Home Depot or these bigger factories where they sell equipment like this. You see John Deere is the number one brand out there, but I wouldn't think to even invest in a company like that. But the way you broke it down, it makes a lot of sense.
You want to look for that catalyst, man. You look at these companies. You say they can't do anything. I encourage your viewers to go and look up a long-term chart of Caterpillar. I encourage your viewers to go look up a long-term chart of Waste Management. The guys that pick up your garbage every morning, go and pull up their stock, WM, and you'll lose your mind at what it's done over the last 10 years. And that's picking up garbage, man. Because
Yeah,
guess what? That's a recurring business model that no one's going to get rid of. Even recession, inflation, tariffs, doesn't matter.
you
That's
need
here
it.
to stay. You need it. Now,
Exactly.
another thing I'm encouraging my clients to look at, water companies. Water supply, water filtration. These companies are huge today. And we look at water like it's just a commodity that's just whatever. It's our most precious commodity in the world. And then you think about, okay, well, what's going to be the tailwind here? The tailwind could also be the amount of liquid cooling that's required for all these data centers that are being built. So you really want to connect a lot of the dots. You want to think deep about what could be a beneficiary of so many different, moving pieces today. That's either coming on its own or even coming from, government programs. Man, there's just so much opportunity if you think deeper than just what's at the surface, man. And that's I cannot encourage it enough. And it's fun if you ask me. Maybe it's boring to people. I think it's a blast, honestly.
I think it's interesting too. You're kind of playing chess. You're thinking outside the box, like cause and effect. The cause is there's going to be a bunch more data centers and ChatGPT is building all these whatever, blah blah blah. I'm not too educated on it, but then you're going to need like those cooling systems. Like I said, I don't know much about what I'm talking
Yes,
about
and a
here, but
lot of them have no. It's okay. It's okay, and you're right though. And a lot of those companies have been doing well, but there's still so much beneficiaries from you say AI. So everyone thinks, okay, Nvidia. All right, Nvidia's had its run. It's been great. Congratulations. AMD is now starting its run because they might compete. But then I've made great money on names like Broadcom as well. That's creating custom integrated circuits, which are specifically designed chips to help people with their AI efforts. But that's all from the chip standpoint. Chips are just, yes, they were the initial beneficiary, of course, because you need them to create these large language models. But where do we go from here? Think deeper. Think about the energy requirements that all these data centers, you're talking about tens of gigawatts of energy demand over the next decade. What is going to fuel that? Okay, now people have been running up nuclear names, right? But nuclear is still about 10 years away from adoption. There's opportunity there. Again, I would say there's some bubbles there, though. But then you think about, okay, well, how about solar? How about natural gas? These are things that also could benefit. You think about, again, we mentioned the cooling companies. You think about grid technology. When it gets too hot in Texas, the whole grid goes down just over a heat wave. Think about the sheer amount of energy needs from these data centers. How about our electricity providers, the utility companies? I've done great on utility companies. They're so boring because they've been around for hundreds of years and they just supply our electricity. But guess what? It's a damn near monopoly. When
exactly.
Con Edison tells me my bill's going up 20% this summer, there's no one else I can complain to or go to. It's going up 20%. And it just leads to more and more profits for them. So yeah, I can't stress it enough, man. If you think deep enough and you find this to be kind of fun and you don't mind doing some homework, it's it could be very very gratuitous, man. And again, that's what I do for my guys because they're a little too lazy to do, hundreds of hours of research. So that's what they pay me to do to find these companies, to put it to them together for them in a neat research report, accompanied with a financial model. So there's numbers and rationale behind it instead of just saying, "Oh yeah, I heard of this name."
For sure. If you were to give like an elevator pitch for a beginner on how to sell stock and when to sell stock, I know you touched on it a little bit, but what would it be?
Okay, so the average guy is not going to be able to model. So that's a stupid answer for me to say. That's what I'll use because of
Hmm.
my background. I would say your rule of thumb, I'm going to give you two, and I think they are genius. I'm going to give you one of which is, do you still believe the product or service is competitive? Okay? So if you're buying a stock, I'm going to assume you took my initial advice, which is buy what you know. So, do you believe they're competitive? So, like, you could have seen early on, 5 years ago, Under Armour is losing its appeal. They're just not it anymore. Okay? If you're an Under Armour shareholder, you know damn well, like, this brand's not it anymore. They're
Hmm.
they're losing it. Now, I would also say, now this can go to the upside and the downside. But selling winners is easy. A lot of youth, they love to take profits. It's selling when you're down that's a big issue I find. So I want to really appeal to this part of your question. The best way I could tell you when to sell is if you say to yourself, I want you to ask yourself, would you recommend this stock now that it's pulled back 20%, 30%, 50%? Would you tell your brother to buy this stock right now? Would you tell your father to buy this stock right now? How about your father-in-law? Would you tell him to buy this stock right now? If you're telling yourself, no, I wouldn't tell him to buy this thing, sell it. Because that means you only own it because you're stubborn to take the loss. And that is one of the number one things I see in this market is you're down on investment, so you just hold it because you're just too stubborn to let it go because it's a hit to your ego. But there's a difference between being down on a company you're bullish on, that you're optimistic on, that you just didn't time right, but with time it'll rebound. And there's a difference between, damn, I was wrong here, but I'm too egotistical to take the loss. And the best way of knowing which is the difference, when I'm down 50% of stock and I love this thing, I'll tell everybody and my mother to buy it. Because if I loved it at 10, I freaking should love it at 5.
Hmm.
But if my answer is nah, I'm not telling Angelo to buy this thing. This thing is a piece of shit. Then you should sell it too. Take your own
Exactly.
advice,
You're
essentially.
gonna have to like detach your ego from it and just like
Yeah.
look at the facts.
And the reason I say like I say brother because it's someone you care about, but you really don't want to piss off your father-in-law. That's a perfect
No,
thing. You really want to think about that because that's really the guy
exactly.
you gotta really
You don't
knock
want to let them
the
down.
socks off.
For sure. I want to touch on recessions. Like recessions are inevitable. Where's your mindset at when recessions happen, and how does that change up your strategy?
Yes, so this is something I'm discussing often because I have a little group chat as well in what's known as Slack that we are having a constant conversation with around 150 or so people, and I am voicing my concerns about a recession. I think we could see one in 2026. I think that's possible. There's something to be fearful of. Again, like you said, they're normal. They happen. I would honestly say we're in a K-shaped economy. In other words, that means a certain demographic is living life just fine, while the other side is has been struggling. So I do think in certain pockets we've already been in a recession. To be honest with you, I think that is why the Fed is beginning to cut rates because they see the writing on the wall. If you look at the data center and AI spend, it's a lot of what's propping up the economy too. Job growth has been lackluster, to put it lightly. So yes, I do think there are some uh, concerns here to be had about a recession. Now, in with regards to your portfolio here, you do want to structure into more defensive type names. So now we're talking about some of the utility companies that I mentioned that rain or shine, they'll it's business as usual. The waste management's that's another thing that rain or shine, business as usual. Uh, Technology, AI, non-cash flowing companies, they will get battered. Yes. Your consumer brands like Lululemon, who's gonna have money for $100 leggings if we are, tighten up around our wallets. That's a place that would struggle. So these are definitely things you want to think about. Other safe areas to play in. You could be looking at healthcare companies, specifically like your Johnson and Johnsons. No one's gonna stop buying Q-tips, you know, or whatever have you like that, or baby wipes. So you can look into more defensive names. You can look into Costco, for example. That's not going to change anything for their business. That's a staple. That's a consumer staple. So yes, you would want to in that case shift your portfolio more defensive. You could even look at maybe even defensive names with regards to Lockheed Martin, a Raytheon. That's you know has a lot of revenue coming from the government and the defense budget. That's usually pretty rock solid. So
Mm.
there's always opportunity in the market. And again, as youthful investors like yourself, which I still include myself in that for at least a few more years, I'll include myself in that category. Um, you almost want to look at that dip like, I gotta jump on this thing, man.
Like
You know,
opportunity.
it's opportunity, man. Now, if we're gonna talk longer term here, which I think is right for me to do so, I do have concerns, and we can go on about this for like hours. Longer term, with regards to not just U.S. economy, but the global economy at large. When you operate at such deficits here, okay, there has to be some kind of path to balancing a budget, especially now with how sensitive inflation has become. Because you can run at deficits. We've been doing it for the last, multiple decades now, but it's never really impacted inflation. So inflation is now what is making it so much more of a issue. So we do need to think about longer term. How do we address the ever growing deficits and the debt that we're dealing with? And there's a few ways without, again, unpacking this too much. Right now, the Supreme Court, based on yesterday's hearing, is looking more and more likely that they're going to revoke the tariffs that Trump put in place. Trump's tariffs were designed initially to bring in additional revenue to help close up the deficits. He initially started with Doge, right? The Department of Government Efficiency to cut spending. Without getting too political here, our politicians are not cutting spending. It all but guarantees a recession. It's too painful. And then I have my conspiracy theories around the kickbacks that they get with all the spending. It finds a way to come back into their pocket. That's the only way you could justify $100 million plus net worths for these politicians that are on set $200,000 salaries.
Yeah.
But that's another conversation. So we just saw off the rip. They brought Elon in and everything. It was a huge failure, Department of Government Efficiency. So you either raise more taxes, right? Bring in more income, whether that's increasing corporate tax rate, income tax rate, or tariffs that Trump was trying. Or I believe we need a mix of both, cut spending. And now we noticed that cutting spending, not happening, at least under this administration, the last administration, and whatever next administration is coming. And now the Supreme Court is saying that the tariffs, it's not for sure yet, but the tariffs might not be allowed and that we might have to refund the money to the people we collected the tariffs from. So now we're left with, okay, how in the world do we close this multi-trillion-dollar gap every year? And the only last thing I have hope in now at this point is our entrepreneurs to come save the day with these next generation technologies that could significantly ramp GDP growth. Because you almost have to grow out of it now. If you get
GDP growth.
gross domestic product, so essentially how much the country is producing.
Okay.
Okay, the amount of services and products we're producing here. And right now, GDP, because essentially a recession is defined by 2 back-to-back quarters of negative GDP year over year. So that is essentially what the true book definition is of GDP of a recession.
Gotcha.
It's still positive right now because of all the spend in on data centers and the like. Consumer spending is a lot of it, man. But so this is my concern over the long term for the United States and the global economy at large. Now, and I think everyone understands this. I don't think anything I'm saying is rocket science. It's just a matter of when does the music stop. Does the music, because this has been an issue for a while now, does the music stop in 5 years, 10 years, 20 years, 30 years? Because if it takes that long, well, then we still have a lot more to gain in this market. You don't want to
Exactly.
cut it yourself short. And I'm hopeful because I generally am an optimist, but I also, my job requires me to be a realist. I am optimistic that the future of robotics, the future of artificial intelligence will greatly reduce costs and increase growth in this economy. We talk. Everyone's so without again. I apologize for getting a little off topic here, but just for the sake of your viewers having something to chew on here, because I don't want to just give you just normal everyday sound bites you hear on YouTube. You know, a lot of people are thinking, okay, AI and robotics is going to kill job growth. That's going to force us to go on UBI, right? Universal Basic Income. So everyone's just collect checks. But if we dive deeper into the data, I'm not sure we can draw that conclusion just yet. Because, brother, the way we are not getting married and the way our generations are not having kids, there is no overpopulation issue. We are actually, we might see in our lifetime, me and you, population peak. Okay? If you look at the data coming out of South Korea and what their population might look like in the next 50 years, okay? They're talking about single digit millions of South Koreans left because of how little kids they're having. Did you know that in America, 25% of 40-year-olds have never been married?
20.
25% of 40-year-olds.
Wow.
One in every 40-year-old you meet has never been married. Not even married and divorced. I'm talking never married.
Never married.
The way in which you're reproducing is below the growth rate. So I am of the mindset here that we actually in 20 years time will need these technologies, the robotics and stuff, to automate a lot of the work
Yeah.
because we're going to be so short staffed.
Exactly. It's gonna kind of balance it out a little
We
bit.
like to hope so. Now, how that equilibrium shakes out, your guess is as good as mine. But
Hmm.
I don't think we can draw the conclusion that, oh, this is going to destroy the future economy and people are going to be out of work and whatnot. Brother, we have a lot of pockets of the workforce that are massive shortages. We have shortage in pilots. We have shortage in healthcare workers. We have shortage in anything blue collar. You know, and it's always an equilibrium shift. It's always an equilibrium shift. And a lot of people also said the same thing when the horse and buggy was destroyed by the car. You
Yeah.
know, and we've had plenty of examples of this. So um, this is all that's going on in my mind when we talk about a recession and we talk about the economy and we talk about the risks I see to it, because I know a lot of this is also bundled into the same question you asked about, you know, the market getting started and being scared. And I get it. A lot of people are, I hear all day, they're nervous about, well, what does this future look like? We're screwed, the debt, the this, the that. There's a path out of this. It's likely going to come off the backs of our entrepreneurs today for the future. I want to so desperately believe we'll get competent politicians. This left versus right thing is silly because neither one's really doing their job. We need people to actually come in and solve real problems. And we'll see if that ever changes in our lifetime. Maybe our generations, once eligible, will provide that fresh blood into the government and the White House to really address a lot of these concerns, man.
Yeah. Yeah. It's a lot to digest there.
I just gave you a lot there, Angelo. I'm sorry, man.
No, don't be sorry. I'm happy that you said that because it's valuable stuff and different topics that you don't always think of, but are important, you know?
Of course.
I want to switch directions a little bit. I know you took some time and went to Dubai for a couple months, right?
Yeah, yeah. I lived there as long as I could last year. I extended my visa once. I couldn't do it a third time. They said if you want to go to Oman, then just come back, just cross the border. Like, how far of a drive is that? They said about 5 hours. I said,
Yeah.
it's all right, man. I'll be back. And then because
Yeah.
there was also rumbles not too far off in Iran, and I was like, you know what? It's all good. And then there was a huge flood when I was there too. I don't know. Remember that flood?
When was
Remember,
this
remember
couple?
that? Yeah, this was back in April, May of last year. There was a massive flood in Dubai.
I'm not sure.
Well,
No.
I was there for that too. I was like, listen, this place is upside down right now. You know what? I was with my
Yes.
brother. I said, yeah, we'll just go home and we'll come back. But
Exactly.
yeah, I did go out there. I wanted to grow the business. I have some clients out there as well that I was seeing. And again, my it does allow me to do so what I do because wherever there's Wi-Fi, I can work. So I'm grateful enough and blessed enough to be able to do that.
For sure. That's cool stuff. Do you see yourself living out there at all? I know the average person out there does pretty well financially. It's a good
I
environment,
could
but
see it. I could see myself out there. There's pros and cons to being out there. There's a lot of opportunity. A lot of their people want more exposure to Western markets.
Mhm.
So I did see a lot of success there, talking to different clients about what could be done on the U.S. exchanges. Um, Now it works for me as well too, given my religious background and whatnot. But if I'm speaking to general person in the United States, it might be too much of a culture shock. Uh, Dubai is very cool, very clean, very safe. Love all that. They make a great amount of money off tourism, and they make a great amount of money off uh, oil to an extent. So they operate at a great budget. Downsides: there is no voting. That it's a kingdom. Okay. So what they say goes. If you're interested in any of the drinking, the smoking, the stuff, might not be the place for you. One downside that I didn't like too much from it, there isn't really much of a culture. Okay, so you're not gonna be seeing sporting events where it's like everyone's like the way we celebrate for the Knicks. Like you don't have that, and I think we take that for granted here. Like I love college sports, I love baseball. You don't get the World Series like we did right now, man. They don't have that there. It's more chill, it's more loungy. Don't get me wrong, the architecture is cool and it's clean and it's safe. That's all great. But at the same time, you have to weigh out like maybe it's not the most fun for those types of people that want to enjoy sports, enjoy being a little rowdy. It's not a place for rowdy people, man. And as Americans, we love that stuff.
for sure.
So yeah, so pros and cons. It really comes down to who you are. But is there opportunity out there in the Middle East? Oh yeah, for sure. Same goes for Saudi Arabia. Same goes for Kuwait. Same goes for Qatar. Like there's dude, a lot of opportunity out there. Um, but it really all comes down to who you are as a person, if it fits your needs, man. But I do plan on continuing to travel, just because I am always looking for maybe that next place to set up shop. In just the case that some of those concerns I mentioned come to fruition. Now the other side to that is if America sneezes, the whole world catches a cold, man. So if America doesn't pan out, dude, in the next 10, 15, 20 years, and a lot of these concerns actually happen, where is there to go?
Yeah, you're right.
So
They're all
that's
going
another thing. It's like, everyone's screwed then.
for
Which
sure.
is also why you should consider owning some gold in your portfolio. You should consider owning some crypto in your portfolio just as a alternative to fiat currency.
I like that. It's a good diversification where you have a little bit of everything just for longevity, I guess you could say.
Yeah,
Uh,
yeah.
if you were to go back to 2017 when you first started Cube, what's some of the most valuable stuff that you've learned through the years that you would tell the Bez when you just started
Would have waited a little longer to leave. I left prematurely, for sure. When you
from
leave,
J.
yeah, from JP Morgan, when you leave a nice salary like that, um, you better make sure your ducks are in a row. I got excited. Um, and looking back, I probably could have stayed an extra year. So what happened? Just a little more background here. I left. I initially had it again. I left because I was getting so excited about the inbound inquiries, the newsletter, free newsletter signups. I overestimated how hard it is. I underestimated, I should say, how hard it is to convert someone into a paying customer. There is so much more that you just think, oh, I'm gonna put up a website, people are gonna join. No. No, 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 no. To get someone to whip out their credit card is very difficult. And then keep them as a client. I've had the same clients now for up to 8 years. You gotta it's not easy, man. And a lot of trust has to be formed first. So I underestimated the difficulty of growing the business, especially when no one knows who you are. And I'm young, man. Still like 24 years old. Like who's gonna trust you about the markets, man? You don't have a single gray hair on your head. You know,
Yeah.
so that's number one. And dude, there was like, so I had to drive Uber, man. So here's what I would do. I took like 6 to 9 months to then start the subscription because I really thought that I could grow the newsletter big enough where I could run ads within the newsletter and that would be enough. Hell no. Hell no. Especially with new competition and the future of email open rates and what you can get. I was like, no way. So then I was like, you know what? I got to push the pace here on a subscription model. And again, move quicker. I had to. I should have moved quicker. Shouldn't take that long to build a website, create a pricing plan, develop a business plan. Should not have taken that long. So I was also slow there. And then, dude, again, I'm bleeding out money now. I'm forget the opportunity cost of not making 6 digits. Now I'm not making anything. So I'm working on the market. I launched a subscription. I have like 10 subscribers, bro. Like paying me nothing. I would focus on the market with them all day and then go drive all night. And
Ooh,
I'd be lying to you, man, if I said there wasn't nights where I'm just like crying on my steering wheel, wondering if I made the right decision. I remember one night specifically, dude. Chick pukes in my back row of my car, and I'm just sitting there, pulled over, and I'm like, my night's shot. I gotta go now and take her home first, and go home and clean this car, and I'm done. Like, and I'm just there, like, bro, I got like 7 subscribers. The market was pulling back the second I started the subscription. Market pulled back 20 something percent because of the China trade war with Trump under the first term. I'm like, oh, I was like, you got to be kidding me. What did I do? What in
yeah.
the world did I do? I had a job that people would kill for, and I'm driving Uber, and I smell fucking throw up in the back of my seat. Excuse my French. And yeah, there was a few nights that I had to deal with that, man. Just pure tears, and I stuck it out. But then I said to myself, if you don't convert this into some serious money ASAP, this is a hobby. I would put the number at 2 years. If you're not making XYZ, and you know what your number is, by 2 years, you need to put a timetable on it. Otherwise, you have a hobby. So I set that number that December 31st for that month. I said I have to make this amount of money this month. It was like 3 or 4 months in advance. If I'm not doing it, you're applying, you're going back to work. You're going back to corporate. You couldn't cut it. Come to terms with it. You couldn't do it, man. I kid you not, bro. I made that month. I crossed it by like, I think $11. $11, bro. And that's okay, that's good. But you
Yeah.
ain't paying enough bills here. You ain't providing for no chick here. You got to do more. So I kept setting more
Mhm.
and more goals for myself. I try not to make it too short term, but within a few months of okay, all right, next goal, next goal, next goal. And then thank God, man, the rest is history. But I could have definitely waited a little bit longer before taking that leap.
Do you think it was worth it just hopping in cold water and just figuring it out?
Yeah, right. Because maybe then you never leave. Because what if I get promoted, in that next year? And it's
And you're
like,
more
okay, now I'm making even more money, and my bonus is so fat. I'm like, all right, screw this shit. I'm never leaving. So yeah, maybe the alternative, is I never left because it's like the longer you stay, the harder it is to say bye to that money. So looking back now that it's worked out so well, I don't regret it. But based on just answering your question in the most truthful way I can, yeah, man, like I could have made a lot better decisions. But you're gonna make those mistakes anyway. But I would say move quicker. Try to reduce the amount of risk you can. You're never gonna be risk free. So get that out of your head. There is no such thing as risk free starting a company. And do not underestimate how hard it is to get leads and turn those leads into actual paying members. Because boy, oh boy, dude, did I develop a newfound respect for entrepreneurs.
Sure. What was your biggest motivation when you smelled that puke in your Uber in the back of your car to keep going those next couple months?
uh how much I hated the corporate lifestyle, man. I
Yeah.
had so much motivation. I hated how late I had to stay in the office. I hated I didn't have the freedom I wanted. I I hated being shit on by senior management. I I every bro, I wanted to grow a big beard, can't do that. Like anything I want is like I just felt so limited.
Hmm.
And as I told you, I come from a family of entrepreneurs. I had already been starting a lot of things back in college, and I kind of knew going into it, like, okay, this is gonna probably be a pretty short term thing. I didn't think it'd be that soon, but once I started seeing the traction, I got so excited I just jumped for it. But I could have just been a little bit more patient. But yeah, really, dude, the motivation came from actually more so not wanting to go back to the corporate structure, man. Just I work more now. I don't care what anyone tells me. You can show me any iBanking analyst. I work more than him. I don't care what he says. I am always thinking, always working. If I'm not writing up reports or creating models, I'm streaming on TikTok. I know you looked at my Instagram. I don't even post Instagram anymore. I stopped posting Instagram for a year or two now. All of my inbound leads, all of my business growth comes from TikTok live streams. So I'll go live for like 2 to 5 hours a week. And that's been my bread and butter for like the last 13, 14 months specifically.
Do you
Uh,
post consistently on TikTok or no?
I usually just honestly I usually just repost my live streams. So
Gotcha.
I'll just post the whole damn thing.
Hmm.
And that has been a game changer for the company. But yeah, man. So I'm always working. I'm always thinking. I have the amount of emails I get every day from clients asking about this, asking about that. It's never ending. But I'm on my terms. I'm doing what I love, and the freedom is. I still have a level of freedom. It just I'm just doing what I like, how I like to do it.
Exactly. And you're working more, but all the work is going towards you. It's your
Yeah,
future you're working
and I
for.
have no ceiling, man. It's exciting that hey, listen, I could hit a record number next month, man. And the thrill of establishing a new relationship with someone, a new customer is, dude, it's exciting, man. It's so fun to build that relationship, foster it, and then provide a meaningful service that does something for them, man. Like
Mhm.
when I get the thank you messages, it's very fulfilling. It's very fulfilling. And I think that's what pushes me as well, is just how can I find the next big investment or help them avoid the next big downturn? And knowing that I have that level of autonomy and level of seriousness to what I do, it's it's fulfilling, man. I think a lot of people with their jobs, they don't feel like they really make a difference, and not making a difference makes you feel like you're not a you're not important,
Yeah,
honestly, man. To put it brutally, I feel like what I do is super important, and it motivates me to get up every morning to help them out.
for sure. That's good
But
stuff. We can
yeah,
wrap this
man.
up soon here, but I do want to ask before we close out, someone who's in their 20s who wants to make $1 million and have financial security in the future, what's their step-by-step quick plan that they could follow?
Okay. Oh man, tough one here. So get the job. Do not, if you're 20 years old, you don't have much experience. Go learn from someone with experience. Go get that knowledge you need. Make that money. Save it. It's okay to stay home. Stay home with mom and dad if you have a good relationship with them. I get some people don't have a good relationship with mom and dad. If you do, stay home. Don't rush to pay some guy $2,500 a month for rent. That could be going right into investing for yourself. If it's blue collar, go learn the blue collar work, then start your own company. If it's not, and you want to go more into the corporate lifestyle, go learn the tips of the trade, get the experience you need, save the money, and again, the same way I invest, it's the same way you have to think about your career. Don't rush and think that okay, I'm just gonna start a company and it's gonna be successful right off the bat. You're gonna have a lot of failures, so work for the man. Eat the shit, brother. Everyone has to. Come to grips with it. There is no path where you're not eating shit to get successful. Now, I'd love to say, what's the path to $1 million? I'm still getting there myself, man. So I'm still a student of this game too. As much as I want to speak from a position of authority, I'm still in my journey as well. But I see the path, and that's what's important. You have to create that path and say, okay, yes, these are the building blocks that will get me there. There is no skipping pages. It's gonna be hard. I've been doing Cube full time, bro, for 8 years. The amount of ups and downs and market turns and losing subscribers and gaining them back and this and that, it's enough to make you lose your mind. So think in decades the same way here. I'm not going to hit you with the find something you're passionate about bullshit line. There's nothing that you're going to love so much that it's like you don't find some parts of it pain in the ass. There's parts of my job that are pain in the ass. It's it's just part of life. I don't know how else to put it. So
Part of the game.
it's part of the game, man. You can't love every single little bit about your startup, okay? But I think the realest thing I could tell your audience, bro, is go learn from someone, mirror them. And sometimes it could, yes, it could even be a completely different. You can then move a different route. It doesn't have. I'm not saying go work for a carpenter and then start your own carpentry business and compete against him. But man, these old heads, they have a lot to teach you, man. They have a lot of also characteristics that are dying today that if you learn them will make you shine. Angelo, with I'd say with all due respect, your generation, and now I sound like Unc, your generation is losing that charismatic touch. Okay? That ability to have a firm handshake and look you dead in the eyes. It's losing that. That's going to be such a diamond in the rough when you guys are in your 30s and you didn't develop those social skills and that ability to be just a warm guy to be around, a charismatic guy, a pleasure to be around. You will learn that from these old heads. You will learn that grit from these guys. You will learn that work ethic, and it'll toughen you up too, man. So yes, I learned that in corporate, but damn it, more of the credit has to go to my father. I I had the path, brother. I had the path. My father owned car washes. His mentality was always his two sons are gonna work with him. They're gonna learn the business. I'm gonna hand off the car wash to his sons. I worked there summers, 14 years old, 15 years old, 16 years old, 17 years old. No pay. In the back. There's a hand car wash. Vacuuming and cleaning and wiping down cars every day. Back-breaking work, man. Okay? I told him after 3 summers, I said, Dad, I love you. I do not have the same appreciation for this business as you do. Seeing him in his 50s still get on one knee to make sure that every single car, every little speck is cleaned up. I didn't have the same love for that. Okay? And it was there for me. He could hand me $1 million business to me and my brother to manage, and the path is there. And I told him, Dad, when you're ready, you and your partner, you guys go ahead and sell it, retire, do what you got to do. For me, this ain't for me. So you do also have to go out there and try things to know what you don't like. It's also process of elimination is what I'm saying here.
Sure.
My brother, same thing. I'm 5 years older than him, but he started coming to towards the tail end of that. Started working. And he's like, this ain't for me either. Now my brother went a completely different way. Point is, figure it out early while the risk is low, while you're staying home. And I guess, man, other than that, um, just be open to trying things. Be open to failure. Be open to embarrassing yourself. I've tried many startups that didn't pan out. I don't give a damn. No one. I am not important enough for people to even think about me, dude. No one is keeping tabs on you. Legitimately, no one. I love to say I have fans. I don't. I am not important enough for people to be like, yeah, I wonder what Bez is up to these days. I wonder if that's still working out. Not a thought in people's mind, dude. And neither are you, and neither any of us. So,
Exactly.
take the stab, take the try, and dude, you actually might figure out early on that I'm not an entrepreneur, and that's fine, dude. That's fine. This business, this thing is not for everyone. It is not Ferraris and Dubai, dude. It's not. I
No.
went out there. I didn't even post I was in Dubai. I didn't even post it. That was for me. That was not for to like. Oh, look at me, guys. I didn't rent any fancy vehicles or nothing. I don't care for that. That was just me because I'm looking maybe for a new place to live.
The way I found out wasn't even through your social media because obviously you didn't post too much about it. It was through Yanni.
Yeah, exactly, exactly. I was begging him to come because I wanted to hang out with him. I said, "Yo, bring whoever." I got a nice apartment. It was not anything to do about promoting the business because
Mm.
I know what my competition does. I know how they like to lean to the side, so the Rolls Royce logos on the headrest. We're not doing that here, bro. There's no lifestyle here. In fact, if you want to lose your hair early and you want to be stressed out all the time, come join the entrepreneur route. It's waiting for you. But you could still make a killing the traditional corporate route. I would be doing just fine, Angelo, if I just stayed the course.
Mm.
I'd be in corporate now for 12 years or 11 years now. I'd be doing just fine, making well into the six figures. I just didn't feel like that was what I wanted to do. There's nothing wrong with it. I hate how we're like shunning 9 to 5ers, bro. You can do just fine. Enjoy your life. You make good money. Put it into a side hustle. Put it into the market. Put it into real estate, and you'll still make out just fine, man. So again, that's the best, in a broad sense, the best 2 cents I can give.
Sure. And I think you hit the nail on the head because you hit a lot of points that run through people's mind, hitting the 9 to 5, staying in the corporate world or following their passion, dropping out, like a bunch of different aspects that you hit, which answered a lot of questions.
I hope I did, man. I apologize if I was maybe going in a few different directions. I
I
know we're
know.
limited on time. I wanted to touch as many bases as I could.
No, it's great. I think every tangent is a point I wanted to hit or a point I didn't know I wanted to hit that we hit. So it's good
I'm
stuff.
happy to hear that, man. I'm happy to hear that. I hope your audience found value in this. And again, if anyone wants to reach out, you could always
Yes.
shoot me a DM at Cube Wealth, Cube Wealth, on all social media platforms. I'd love for you guys to tune into my live streams on TikTok. I usually go live on Tuesday nights, sometimes Thursday nights. I always at least do one live stream a week, but I will try for two. So I might actually go live tonight. Usually it's around like 8 p.m. for like 2 to 3 hours. So would love for you guys to join in there. And any questions, you can also shoot me an email at help@cubewealth.com. So you can find me there as well.
Awesome. Do you have a website or
Yeah,
no?
cubewealth.com. So I
Perfect.
pretty much got that handle everywhere you look.
Awesome. And I'll link everything for the audience down below. For Bez and Bez, it was a pleasure. I learned a lot, and I'm grateful you hopped on.
Dude, I'm even more thankful that you had me on, man. I wish you nothing but success, man. I love what you're doing here. I think it's the start of great things to come for you, man.
Appreciate it, bro. Take
All right,
care.
man.
Thank
Talk
you.
soon.